Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Wednesday. I'm feeling a little discombobulated today. Yesterday was an interesting day, end of month. So let's get right into talking about that because we had a good trade yesterday and it didn't work out, but it would have been a great trade in the end. So coming over here to the volume profile, we had this like down movement in the morning, but then going into the end of the day, it was just all up after that. And yeah, we did get some really strong end of month flows. So I was able to call that correctly. It just didn't work out in our time frames. But that's okay, I guess. It was only a small loss. And here we have the S&P 500. Did okay, but then sold really hard into the end of the month. They are recovering it in the overnight, but we're just getting started. So we'll see. I think the market is a little frustrated that they can't seem to get above 4,000. That's starting to become resistance, if you call it that. And I think you could see a lot of flows in March flip to selling in equities because of this. Oil's up yesterday, but down today. It's a rough ride over there, but oil is trading a little bit more strongly, a little bit better trading over there than there has been recently. Natural gas holding its gains from yesterday. Gold and silver recovering. We did see a little decline in the yields. Then we come over to Bitcoin and the dollar. So Bitcoin here, well, it's up this morning, but I wouldn't say it's anything too significant. The dollar, though, lower here, now approaching 104, so that's an interesting shift. Let's come back over here. Oh, why do I not have the I don't have financial juice up here. Yeah, that's funny. What the heck? There we go. Okay, so we got Fed's Kashkari speaking at the top of the hour. We also have ISM manufacturing. That has been like a pretty key data point for the past, yay amount of time. And it's been something that's been screaming stagflation, right? So we are seeing a little bit of selling here in the treasuries. But we're pretty close to where we were. Remember, it was like 3.95 was where we were trying to play around. So it doesn't surprise me to see some of that selling maybe into the manufacturing news. Oh, no, maybe not. I think I might have jumped the gun there a little bit. Morning, Uzi. Blow my nose and everything. Okay. Oh, surprises me the most is how fast Hitler took Germany from a relatively disarmed and economically crippled state into a militarized, aggressive one. The rearmament to less than half a decade. It is true. I feel like that we often will like write a country off or whatever, and they can flip things around real fast. Is the stream a little bit glitchy? Yeah, you might be. Let's see here. Well, I'm not seeing anything suggesting I'm dropping frames or anything like that. So let's just kind of wait here a bit and see. I mean, the S&P 500 has been on a pretty strong downtrend for the past 30 minutes or so. It seems like the all of the instruments are like rearing to go quite early for there not really being any like bottom of the hour news or anything like that. So that's interesting to me. Jim, man, Jim is always in on whatever the discussion of the day was, you know, the political thing of the day. And so now he's saying, you really think the federal government did not have this in mind when they took over the student loan game and then aggressively started pushing degrees that were priced 3 times higher than their actual remunerative value? That was totally, I mean, everybody called it when Obama like expanded that, right? It was an intended government takeover of education from the beginning. We should talk about that one a little bit here, just at the beginning. Well, you know, nobody's here. No, because this court case for whether Joe Biden's student loan forgiveness plan, you know, how that goes is probably going to be pretty significant. I suspect that it could have far-reaching effects in terms of like precedent, because okay, so like here's the thing. I think that the Republicans or the, let's see, the challengers to the law have a number of really good arguments as to why this is an abuse of that law, that's not what was intended by the law, that the law maybe doesn't necessarily allow you to outright cancel loans, and that if they did, that it was an abdication of Congress's lawmaking ability that they don't really actually have, and so the law was, you know, unconstitutional to begin with, sort of a thing. Okay, but the big question is standing. Okay, so if you go on Reddit yesterday and you read all of the posts about this on Reddit yesterday, all of the news stories focus on how there was one of the justices asked the representative from the states a lot of questions about if they had if they could actually bring a suit, if they had standing, right? And the guy had a little bit of a difficult time, you know, like they gave him a hard time. Okay, and so the liberals think that this court case is going to be thrown out by the Supreme Court over standing grounds, right? Couple of problems with that. Number one, there were already 2 lower courts that said that they did have jurisdiction. And number 2 is that there is a state. The states are actually bringing the suit. So there's kind of this thing that's like, if the states want to contest a federal law as unconstitutional, then we kind of should hear it anyways, sort of a thing. So there's that. And then the last thing is that if they did throw it out on standing issues, then all that would happen is the Republican-controlled House would then sue on Article 2 grounds, right? And so there would be like a delay, and then another court case would come up later, right? So questions going to get answered one way or another, and I don't think it's going to go the way that the left thinks it is. So just keep that in mind. I don't know if that's one that you can make money on or not. It seems like there is money involved, so, but I don't know how you would trade it. But I think that culturally it's going to be a significant thing. So pay attention to that one. But we won't find out until like May. So I'm kind of excited to watch it though. Adam K, first time watching, could you introduce your screen layout a bit? Sure. So I do have a video going into like my whole screen layout, but just to be really brief, you know, in the upper left where I have a chart of the S&P 500, then I've got a bunch of DOMs, and I've got S&P 500 futures, and then I've got 30-year, 10-year, 5-year futures on top, and then I have micro yield futures on the bottom that goes 2, 5, 10, 30 on the bottom, right? So these are all time and sales windows. Red column is like limit sells, blue column is limit buys, and then the middle columns are the buy, or the market orders rather. The market orders hitting into those limit orders. And so that's kind of the way that we do that, is so that I can see a bunch of correlated instruments at the same time. It's kind of the way that it goes. I'll tweet that crash. So kind of what we're doing, I think the more useful thing, if you've never watched a stream before, is that what we're doing is we're looking for pieces of information that we have that might be able to predict which direction the flows are going to be that day. And then we're watching for a small sign of confirmation in the actual order flows. And then if we get that, then we try and go with it, assuming that we think that there's going to be enough of an imbalance, a continued imbalance to move this. Now, this right now is kind of interesting because there was a little bit of a spike up in the 10-year and the 30-year, frankly. But the 10-year did just reach a new low. So the flows, I'm expecting the flows to come in short today, but they haven't quite done it yet. And it is being they are dragging their feet a little bit. So I got to be careful about that. My nose is still draining here. Hold on. Yeah, I'm actually just, this is actually just gambling. Before I got on the stream, I flipped a coin, and then so no, I was actually thinking about this yesterday, because I feel that how do I introduce this concept? Okay, the rise of the internet and social media appears to have been culturally damaging to society. And the thing that I find interesting about it in particular, and maybe this is kind of just like a modern society trend in general, but you know, if you look at like old school societies, you know, or like places in the world that are still not developed at all, right? They're still unindustrialized tribes, sort of a thing, right? There's always like rituals and rites of passage sort of things in those cultures, right? So there's this whole thing that humans are actually kind of like driven to ritual to some extent for some reason, right? And when you have communities, you know, communities usually have, you know, like a simple example would be like if you're Jewish, you have the bar mitzvah, and all it is you just get in front of everybody and you quote a scripture, right? That's it. Okay. But that's their thing. They have the party and it's the ritual, right? We don't have rituals online. Maybe it's because we're not there physically. I don't know. But like rituals online, not necessarily a thing. But I kind of feel like if we're trying to create a stronger team and a stronger community here, then what we really need is we need an initiation ritual. So I've been thinking about what would be the most appropriate initiation ritual. And my first thoughts were like crazy things like, okay, you have to hold a position in the micro yields through an FOMC day or something like that. But I was like, no, that's dumb. Let's not do that. So if you have ideas for our initiation ritual. You need to watch. Yeah, so I have one that goes through my workspace if you're really interested in that. And then I've got one. So my most recent video that I put out yesterday is a really good introduction, to be honest with you. So and it goes in and it references a couple of other videos worth watching. Then there's the order flow video series. Then that's where the bulk of like the really where the good stuff is, the stuff that you're going to learn from Seth that isn't anywhere else out there. So, well, we had another little bit of a move up. There was not actually delta associated with that one. In fact, I am now seeing selling in all three of the instruments. So I would say I'm not too happy with this at the moment. It doesn't seem like the price is really in line with the flows per se. It's kind of playing games with us, I think. You know, in Fight Club, the initiation ritual was you have to sit on the doorstep for like 3 days, right? Wasn't that it? So here's what got me thinking about it, right? Well, first of all, because we had like the long story was that Uzi and I had an argument for quite a while the other day, and afterwards we talked about it and like, you know, we worked it out, everything's cool, and but we were both kind of thinking, and mostly me saying this and him kind of thinking about it too, and it was just like, you know, my focus really needs to be more on the community. I focused really hard on getting the information in there, you know, that here on this channel, the information that you need to at least stand a chance as a day trader is there, right? And so I've constantly been sitting there thinking, you know, okay, what's the next stage of that? There's got to be even more valuable knowledge out there for us to pick, for us to learn and to share and so forth, you know. And so that was like into, well, like what I'm doing right now is I'm studying machine learning, but like I'm realizing, well, most of you aren't going to be able to take advantage of that necessarily, right? And that's when I kind of realized that no, the thing that gets you to the next stage of effectiveness in the trading is having an effective team. I think that's kind of what I thought, and so that was kind of on my mind. And then there was a Reddit post about Fight Club where the guy was talking about how there's a lot of like really macho kind of guys that hold Fight Club up as like their show, and like they don't understand the movie, because the whole thing was that like young men that are disaffected are prone to attaching themselves to like a cause, right? And what was really going on was that Tyler Durden was taking advantage of those guys and basically creating a cult, and the narrator realized that's what was going on, and that's kind of why they came in opposition to each other. And so like the initiation ritual and all of that sort of a thing was really a manipulation by Tyler Durden, right? So yeah, you can manipulate people with those sorts of things too, but it's also kind of an interesting look into just human nature, that it's like we kind of need that sense of community. And like the reason that we're having a problem in our society maybe is because we don't have those cultural community types of things. like the ritual and stuff that young men can kind of attach to and then use to improve themselves, right? And because they didn't have that, somebody else was able to come in with something awful, right? And so I think about that in day trading. It's like, well, it's important in our society to have people that understand what things are worth and understand that the market isn't efficient, and that sometimes we have to make discretionary decisions in order to do what the best thing is. And this whole thing that like, we'll just go along with whatever the market says is kind of stupid, right? We need people to understand that. And it's not like there aren't people out there that are interested in the markets and are interested in taking on that role. They do exist. And the whole GameStop thing really shows that there are men out there interested in that area of knowledge, right? But what happened? We didn't get anything out of it. It turned into a freaking cult because the culture that you need, the solid framework that not only has the feeling of community, but like the correct information and the goals and understanding necessary for it to be beneficial to society isn't there. And so we need to work a little bit harder to create that place. And that was always kind of what we started out with Discord and so forth. The Fight Club initiation was similar to the old school Kung Fu Temple initiation, and the irony of them wanting to get out of the social expectations only to ultimately form their own societal expectations. Yes. But isn't that the thing though, is that like the societal expectations that we have are not community. It's like a cold hard system that kind of forces you into a pigeonhole. That's really what it is. I think that it's happening to a lot of young kids. I'm seeing a lot of young kids getting into stuff, you know, certain ideologies, like some of these kids, man. I'm super into politics, okay? Some of these kids, they get super into politics really early, and they form these really, really aggressive political opinions. I mean, it's like you say anything that even slightly deviates from their orthodoxy and you just get swarmed by teenagers. It's crazy to me. I always thought when I was growing up on the internet, I argue with a lot of people on the internet, man. I always thought that like these were people that were older and smarter than me and so on and so forth. And like what I'm realizing now is that a lot, and I mean a lot of the activity on the internet is teenagers, because older people that are really doing stuff with their lives don't have as much time to write. You know, I don't post as much stuff on Reddit as I did 5 years ago before I had kids, you know? We favor competition over collaboration. Okay, so now that's an interesting thought, Uzi, because I think in the society at large we kind of do. Actually, I don't think it's necessarily that. Here's what I think it is. Okay, like so you think about capitalism. Let's call it capitalism, right? Capitalism is like survival of the fittest. You pit different businesses and against each other, and you know, some succeed and some don't based on their merits. Okay. And so you're an individual and you come in here and you're like, okay, well, I want to do good at day trading, for instance. How am I ever supposed to compete with like Citadel, right? Have all of these computers and all of this other sort of stuff, right? Okay. And the answer is that capitalism is a team game. You can choose to go and join Citadel's team if you wanted to. If you're a kid, I'm telling you, if you're 16 years old right now and you said in your mind, I want to work for Citadel, There are things that you could do right now that would put you down the path to do that, that would give you a really, really good chance. And if you're dedicated and responsible and, do all of the work and actually, get into the books on this sort of stuff, you stand a very, very good chance of getting into your target company. If you start young, you really do. I don't think that kids understand how much power there really is in, if you say, I want to work for this company or I want to work for this place, and you start working towards that as a kid, how likely you are to make it. Really are, right? You can join. It's a team game, right? Now the teams still compete against each other, but it's a team game, and we've forgotten that. In American society, we're so focused on the individual and being independent and stuff, right? Like I always say, like one of the things in dating, like women want to show that they're like an independent woman. Well, I mean, I'm not saying that's bad. Okay, I think that maybe they might mean different things by saying independent. Like maybe independent just means competent, because that's the good thing. You want to be a competent person that's going to help you in finding a partner, right? Responsible person that does what needs to be done as an adult. Yeah, that's an important thing that you want to look for in your partner. But like, don't need nobody else. Let me tell you something, kids. That's a red flag. It's not so much of a red flag as it's just people that are comfortable being really close with people and are comfortable relying on other people for things are more successful. Okay? That person that is not independent, that wants to rely on people, is more successful. So we want to build teams and build communities. And, in American society, we're so focused on the individual that we've kind of steered people away from that. I think the other thing is that the internet has kind of steered people away from that, because the internet has kind of turned into, I want to be the guy that's the famous person on social media, right? And so that becomes an independent thing. But I tell you what, a lot of these people that are super, do super well on social media, they actually have a team behind them, When you try the egalitarian collaborative approach with the particular socioeconomic, racial demographics, they almost always immediately take it as a sign of disrespect, or people hate it when people who they perceive as better off than them talk smart to them, and with less to lose, they're far more prone to fight. Yeah, because they don't think that person is there to help. Yeah, I don't know how we teach this principle. It was something I learned from a book. I think it was from the Tao of Badass. And I wish I could find like the research or where he got this from, because he very much portrayed it as not something that he came up with, but he talked about like what the actual social hierarchy is. And it was like, at the bottom of the social hierarchy are people that just want somebody to pay attention to them, right? And then there's like, you start to get competitive and you start trying to tear other people down, or you just get to, we're going to directly compete against each other. So how do you get to the top of the social hierarchy? You just outcompete everybody? No. The person that's at the top of the social hierarchy is the person that makes everybody around them better, right? So for instance, if I have a disagreement over a political issue with Uzi, or actually it kind of sounds like that Uzi was also just kind of trying to bust my balls over it, was maybe not as into it as I thought he was, but I still want him to be around, because I know that him being here has made everybody else better, right? That's why he's valuable to the social hierarchy that we have. Or actually is another good example, somebody that's contributed a lot, right? By them being here in the stream, they've made me a better trader, and they've helped everybody else in the channel as a result, right? That's how you get to the top of the hierarchy. The person that's that's at the top of the hierarchy is the person that makes everybody around them better. And that's why they're in that position. Convincing them of that is exceedingly difficult. Like, you gotta think we own a cleaning company. You're right. Our workplace experiences aren't with, well, yeah, but like, So go back to the ritual and the community sort of a thing, right? You can't bring somebody in and be like, okay, here's what you got to do, yada yada yada, and then they expect them to do it, because they're gonna feel like they're being talked down to, and especially if it's things that they don't understand or are like contrary to their perceptions of the world, they're gonna like kind of tend to reject it, right? So I think that the first thing that you have to do is you have to show them that you're on their team, right? And how do you do that? We're part of a community, right? The things that you've done, I did them too at one point. For instance, like there's an initiation ritual. Everybody's gone through the initiation, Do you see what I mean? It's like those things that we in modern society we almost kind of look down upon as like, well, they that was something that they did in primitive societies, and now that we're industrialized nations, we're above it. I'm starting to realize that there's real purpose in them, actually, and that they're tools that we should be taking advantage of. The problem is just that it's like, how do you translate it to online? Because, people with serious problems in their lives, let me tell you something, man. When we were missionaries, it really sucked to be missionaries in rich areas, because they're people that they think they've got life figured out, right? They're not looking to change. They're not interested in joining a new religion. They have their church that they've been going to forever, if they have one, or they don't want to go to church, right? They're very unlikely to change. Whereas you go into some of the less well-off areas, you can find people that, maybe they might have some problems in their lives, but those are the people that have the greatest capacity for change. And I have seen some people that really switched their life around, man. Like, were really just like in the total dumps and completely flipped around and became completely different people, and it benefited their lives in every way possible, right? And again, like I see here with the trading community, what I see is a bunch of guys. I see a bunch of kids coming into the day trading thing that are kind of like that demographic of young man that doesn't necessarily have a lot. I wouldn't say that they're troubled per se, okay, but there's definitely guys that are looking for something to latch onto, and they've latched onto day trading. It's definitely a thing, or the markets in general, right? And then what happened was we just threw them to the wood chipper, right? The GameStop thing was a once in a generation cultural phenomenon that we utterly failed to take advantage of, right? We had this group of people that were interested in participating in the markets, interested in capitalism, and we threw them to the wood chipper, and we let paranoia and conspiracy theories take over instead of giving them a real structured path forward, Like, these people were ready, and now they've become a part of a cult, and it's good luck getting them out of the cult now. So we got to figure this out, right? We've got to figure out, like, what is it? Because there are some creators that are doing this, and they're not the ones that you really want people to, they're like narcissists, right? It's like these narcissists come in, and then people start following these narcissists. It's super crazy. And there are some guys in the trading world that are like really just straight up trying to take advantage of their audience, and it's really disgusting to me because I really care about my audience, you know. So how are they doing it? And how can we incorporate that into a positive system that helps them, instead of just as a method of exploitation for the creator to get more money out of them, you know? And so anyways, my first thought was that you kind of have like initiation rituals. Now, it doesn't have to be like an initiation ritual per se, but I think that we should have something that's like, when somebody new comes in, what is the process that we go through with them? Right? It should be like, okay, you got to get on voice chat and then publicly disavow all forms of technical analysis. And so this thing in the Donald, like when Donald Trump, that phenomenon kind of took off on Reddit, the initiation ritual was that you had to disavow all forms of cuckoldry, which generally meant denunciating Mitt Romney and Jeb Bush. That was the initiation ritual, right? Do you remember that stuff, Uzi? That was the initiation ritual. Actually, I did have, here was one idea that would be funny. Yeah, I do want, by the way, I would like to come up with ways where we can get more people on chat and, you know, do stuff. It's kind of hard because if we tried one time, we're just in voice chat and, you know, everybody can talk. And that was way too distracting, right? But we need to come up with some sort of structured way where we can have other members come on the chat and it's not me all the time, right? The Proud Boys was to yell out breakfast cereal names while people punched you in the arms. Oh yeah. Yeah, and I don't think that the initiation ritual should be like hazing per se, right? That's where it's like, well, we can come up with something that is like meaningful too, right? Actually, so I had one. I don't think it should be the only thing, but like, one thing that I think is that we should do more often, let's just say, is like, show me your size on the DOM. You know what I'm talking about, right? It's like, okay, there's 20 contracts at 3.93. That's pretty far away from the market. So put on as many contracts as your broker will allow you to at 3.93 bid and show your size, right? We've done that a few times. I feel like that should be a more frequent thing. Chris Moore, good morning. Any ideas why the market is selling off hard this morning? Yeah, so first of all, just realize yesterday, I mean, because we're still in the overnight action, right? So yesterday there was pretty strong end of month selling flows, right? That last like hour, 30 minutes or whatever of the regular session was like really strong selling, right? And there was some really strong action in the treasuries as well, by the way. Okay, the treasuries, somebody came in with their size and they were like stacking 5K at every price, and they traded a lot of contracts there into the end of the month. Okay, and it was to the downside. Okay, so that's the first thing, is just remember that there's that context, and that is kind of continuing through into today. All right. Now we do have, so Mr. M, thank you for reminding us that we do have Fed's Kashkari should be speaking at the moment. I don't think I've heard anything from Financial Juice on that yet. I'm just going to refresh that just to be sure that I've got that going correctly, and make sure that I have tweaked that set up here though. But the other big thing that we got this morning is the ISM manufacturing PMIs. And that has been a pretty influential number the past few months. And it's also been a number that hasn't been very good for markets, right? Because every time that reports comes through, it shows the manufacturing sector is really struggling, but the prices for everything continue to go up. So that report keeps screaming stagflation. And so it looks to me like the treasuries are kind of selling ahead of that news event, perhaps. And maybe the equities are doing a similar thing because of that. I also think another thing that we should keep an eye on here is that CTAs are starting to switch short. CTAs have been a source of supply now for the past week, and a lot of analysts are concerned that the CTAs really start piling on and we start to get a more extended downtrend. You said meta orders were pushing price down yesterday. Well, so what happened yesterday was a little weird, right? But we had a number of what I would call meta orders yesterday that pushed the market around, and it was kind of hard for me to sort out what they were from, right? The meta order that I was looking for, which was the end of month buying in the treasuries, did happen, but it didn't happen until after we were done, right? So this morning, it looks like there might be a meta order sell, but it's still a little iffy, right? Okay, so CTAs stand for Commodity Trading Advisors. And commodity trading advisors are generally doing some variation of a portfolio momentum strategy, which means I come in and I look at all of the different futures on the CME and I say which one is up the most and which one is down the most, and I buy the one that was up the most and I sell the one that was down the most. Okay, so doing that on just like a single instrument is kind of iffy, but when you're doing that across like all assets, right, then you catch these momentum effects, and such strategies tend to perform about as well as the S&P 500, maybe a little bit less. But while the S&P 500 has a far left tail, which is to say that like when things get bad in the S&P, like it's really bad, right? You get really bad drawdowns and stuff. Momentum strategies have a far right tail, which is they might kind of underperform the S&P 500 in general, but then when they do well, like last year, they do really well. And so what has happened recently is that the CTAs did so well last year that they're starting to become a major flow force in the markets. And so you're seeing a lot of flow analysts focus on models of commodity trading advisor strategies and finding prices at which their quantitative strategies are going to say to buy or sell an asset. So the CTAs were a major factor behind the rally that we saw in January and the beginning of February in the S&P 500. But now they've made so much money off of that, and they're all mostly long, that they're now a source of supply. Okay, so that's a flow to keep an eye on, right? And then when you add on top of that like options and stuff, because there's some gamma and stuff to expire this week, right? Could result in more selling in the S&P. Like if I was going to take a swing trade, I don't know if this is like the best point to do it and everything, but if I was to make a trade to say, will the S&P 500 be above or below 4,000 in one week to 1 month, I would probably be going short this boost. Are we aware of any? Yeah, well, so let's not call them setups, but there's definitely information that we get on end of month that can kind of help us determine these things. But a lot of the time it's like, I don't have a sophisticated enough model to know what those flows are going to do, right? I think that there's some proprietary data that we would need to do those things. But you visit Zero Hedge, they often talk about Nomura. Nomura is the one that I think really has the best model and talks about that the most, where you can kind of see what those flows were. Now coming into today, I don't know. There is still like some options expiring this week though, so should keep that in mind. I wish it was as simple as you could just watch the market prices to see it, right? I guess you kind of can. Like, what you have to do is you have to say, what was the return of the S&P 500 this month? And what was the return of the Treasury this month, right? And the thing that these models do is they are actually able to figure out how much money do these funds actually have to buy or sell. And then you can kind of sort it out. But too many headwinds, probably a recession, inflation woes. That's why I think we're going lower by spring/summer then, question. Yeah, well, so I just know that, like, in the short term, the flows do look kind of tilted to the downside in March. I don't mean that to say that I think that we're going to have a recession in the second half of the year or anything like that. I mean, there are times where it seems like we're sure headed for that, and then, like, the narrative switches and everybody flips around, right? So that one's a little hard to predict, right? I don't know. We're kind of in a weird spot because, like, one, the economic data is, like, really confusing right now, right? Like, some of these numbers, I'm not entirely sure we can trust them, right? But rates remain high. Well, I'm kind of wondering if the scenario that I'm concerned about is one where the Federal Reserve is forced to continue tightening. That's what concerns me, right? Whether that leads to a recession or not, I'm not sure, but it kind of looks to me like we've got a lot of kind of like generational types of dynamics going on right now that are inflationary and won't be going away anytime soon. Like this whole thing that they were telling us at the beginning of 2021, where they're like, it's just supply chains are strained and the inflation will immediately go away. Okay. Like I certainly felt that there was supply chain problems and that the pace of inflation would maybe back off. But I was always kind of skeptical of, like, look, you can't put that much money into the economy and not spur some inflation, right? And I think that part of the problem is that it seems to me like inflation tends to be reinforcing. So if you're getting low inflation, it tends to lead to more low inflation. And if you have high inflation, it tends to lead to more high inflation. And so what happened was we injected so much money into the economy that we kind of flipped over there, right? And then you look at all of these other factors like boomers leaving the workforce, the labor market being very, very tight. China is putting a lot of stimulus into the economy. Deglobalization is now starting, right? These aren't going away. So we're looking at, a decade or more of where inflation is difficult. And inflation is a difficult issue, right? No. I was not 100% on board with Powell each time when he said it was transitory. That's not true. I did support, though, the decisions that they were making, or at least I said that they're understandable in the context, right? Because the whole thing, the mistake that the Federal Reserve made, just remember, just come back with me for a moment. Back to 9 months ago. This is a little dream sequence and everything, right? That the issue was the Omicron wave, right? And the Federal Reserve was concerned that the Omicron wave was going to lead to another bout of economic weakness because the Delta wave, that's what had happened, right? So that's why they did what they did, right? So to the decision of whether or not they should have raised rates earlier, I was kind of more like, well, this is what they're going to do, and it makes sense with the way that the Federal Reserve functions. Okay. And there was like the transitory thing, but I remember speaking many times about being like, I would not be like putting too much money on inflation is just going to go away. And more to the point, once we got to like August, October, right? There was like a real flip, right? Because the Federal Reserve kind of said through the Wall Street Journal, and a lot of people didn't pick up on this story, but they said, you know, we think that the risks to further waves of the coronavirus are actually inflationary, right? That's when they flipped. And so me starting in about August, and then definitely from like the beginning of 2022 onwards, was saying rates are going to go higher. And it looks like inflation is going to come back and be a problem, and it was, right? And then from there out, it was like, I mean, I switch as the market regimes have changed and everything. But I guess the thing that I was kind of trying to say though is that now that we know everything, right? This assertion that there's just supply chains seems really dishonest, doesn't it? I mean, maybe it was just that people were misinformed and they didn't see everything, but now we can see everything, and the idea that the administration was trying to push that it was just that is transitory is ridiculous now. It's really ridiculous because these things aren't going away. Just imagine who thing would be if we're yeah. Well, it's I mean, and this is going back to like the political thing. This is the one that I find really interesting. No, well, yeah, but the discussions that you're thinking about, Lucas, had more to do with the coronavirus and everything, right? Rather than is it inflation transitory? Because by the time that the discussion became more about is it transitory, it was kind of a moot point to some extent. It was like, well, rates are going to normalize at the very least. Like, we know that rates are going to go higher, right? And then we'll see if they're transitory. And, you know, we saw a lot of forces. That's where it was like, well, part of it is transitory. How does that sort out when it goes away? Well, we can go back and find them. I mean, one of the things that you got to remember is that our opinion changed a lot over time through that whole period, didn't it? Right? Like really, the big thing in like when you want to talk about did the Federal Reserve make a mistake, or as I would put it, why did the Federal Reserve's strategy not work very well in that situation? Well, it was because we were all focused on the Omicron wave, and that was not the thing that really ended up mattering, was it? Right? At that time, what was it? July 2021, right? July 2021, nobody was thinking there's going to be a wave of deglobalization because of tensions with Russia, right? That was not on anybody's board. Right. But yeah. Well, yeah, but the reason why I'm trying to defend myself with you is because this was the thing that at the time I kind of felt like when you were arguing with you that I was trying to get across that I didn't feel like was translating, which was that we can really kind of know what the Federal Reserve is going to do, right? And there are kind of flaws in it that we know kind of happen, right? The Federal Reserve, because of what they do affects everybody, really has to be risk adverse with their strategies. So if they think if there's something like the Omicron wave that has the risk of like really destroying the economy again, right? It doesn't really make sense to start aggressively raising rates in the face of that, right? From a risk reward perspective. But now we know that Omicron didn't work, and I think that a lot of people that that Omicron wasn't really a big deal, right? And I think a lot of the people that at the time were saying that Omicron wouldn't be a big deal, good call, and they were totally right, okay? But the Federal Reserve didn't know that at the time, right? So they made the best decision that they could based on the information that they had, based on the strategy that they have. And so we kind of knew what they were going to do. And I think that there's very good reasons for them to do the strategy that they do, right? But yeah, in that instance, it didn't work out for them, right? And that was the one that was like the big argument place, was because a lot of people wanted to say this is why we shouldn't have a Federal Reserve. And I'm just, I want to put some, I want to temper that a little bit. I want to say, like, you can't expect the Federal Reserve to get it perfect every time, right? And the decision that they made did make sense given the situation. It just didn't work out, right? That's a little bit different, right? And that was a different issue from after Omicron, because the whole thing has been after Omicron when the Federal Reserve said, okay, now it's time to normalize rates. Rates are going to go higher the whole time from that, right? But then different issues come and go, and we say lots of things, and our opinions on them change a lot over time. So I'm pretty sure that there probably was some points at which I felt that inflation would only be a thing for a year or two. I think there probably was a point but that's certainly not what the fundamentals suggest right now. And the thing that kind of frustrates me right now is that when you come and you look at what the bond market is pricing, the bond market is still pricing this like it's a transitory thing, right? They think that as soon as the Federal Reserve gets interest rates to the point where it starts to do what it needs to do, that they will almost immediately crash the economy and have to flip around to going to low interest rates again. And I don't know why it keeps pricing it like that. I think that it may be based more on like kind of like a historical model sort of a thing. Okay. But when I look at like what are the pressures on inflation that we have and what are causing them today, I see a lot of things that causing inflationary pressures that aren't going to go away in a year, that maybe won't even go away in 10 years. Like the tightness in the labor force from boomers retiring and the population declining. That's going to be something we deal with, that the economy is going to deal with probably for the rest of our lives. That maybe something changes for like our grandchildren, but that's a dynamic that's going to be in place for the rest of our lives. And I remember discussing this many times, right? And always kind of being like, I'm not quite sure where that comes out, because we kept being told that part of the reason why inflation was low was because the population was declining. So population is declining, you don't need as much money, right? Doesn't seem to make sense anymore, right? Now the dynamic, which is that there are people that are retiring, you have to replace them, there aren't enough people to replace them, is a much stronger force in the market. And that almost seems silly that people were saying that this is going to be a deflationary force for a long time, and yada yada yada, right? Like people were like dead wrong about that. Seems to me. Watch, 6 months from now it'll flip around, and then the labor market will be extremely loose, and we'll be like, oh, it was really stupid of us to think that the labor market would be tight for the rest of our lives. And the market has a way of changing that sort of stuff on us. But so Feds Kashkari, we are in a hot labor market. So I haven't seen too much from my news squawks or anything about Kashkari speaking, but apparently he's still talking. Well, everybody complains about that they don't make enough. So it's a good thing the labor market is tight, and hopefully we're able to get people's income up without having too much feedback inflation. But so here's the thing on that so here's what I think is going to happen. Okay, you got to remember, like, when you're looking at societal issues or like a market-wide phenomenon, it makes a lot more sense to try and look at the structures that lead to that, right? It seems like everybody wants to think, well, this happened because people did this, right? And it's like, well, okay, yes, but why did people do this, right? It's like if marriage rates are down, okay, like everybody acknowledges that not as many people are marrying now, right? But why? Because everybody just goes to, well, people don't want to do it anymore. But if you actually look at the structure of it, and in marriage in particular, there's a couple of things in there that are kind of discouraging people from getting married. Okay, there are structural reasons why less people are getting married. It always makes sense to try and look at the structural issues behind it, right? Okay, so people are not feel like that their standard of living is declining, right? And it's that they're not getting paid enough. Okay, well, I think that is a lie, actually. I think that it's a meme that's been spread around by Democrats where they say, look, your wages haven't kept up with inflation, yada yada yada. But it's because it's a bunch of numerical wizardry where the way that they're comparing these things don't match up, and it creates that. If you correct with the correct inflation numbers and so forth. Okay, I just heard something from Kashkari about a 25 or 50 basis point hike. Market did move down on that, not too aggressively, but they did move down on that. Anyways, so they will say that your wages haven't kept up with inflation, but it's because the thing that they're using to say what are your wages, number one, you have to do is total compensation, because a lot more of your wages are going to benefits, right? And then you have to account for inflation. And the thing that they use to account for inflation is a different thing that they use to account for inflation when they look at productivity. And so it creates this statistical aberration that you see in the chart. When you do things correctly with the correct metrics and so forth, you'll see that actually wages have kept up with productivity gains and inflation just fine. Okay, so but then you have to come back and you have to say, okay, because I know that like the leftist is saying there, but okay, but how can you explain housing unaffordability is the worst that it's ever been, and all of these other things that are making it difficult for people to live, right? Well, I'll tell you what it is. The cost of things have gone up. That's the real problem. See, they've lied. They've somehow been able to deceive the whole American public to convince them that the problem is that the companies aren't paying you enough, when the real issue is that all of your bills are too high, especially your medical bill. Then, in all fairness to Democrats, I mean, I don't think that it should be a single payer system. Okay, I don't think that would work in the United States, but the medical costs in the United States is like the biggest problem for us right now. Okay, the amount that people pay in healthcare insurance right now is effing ridiculous. It's ridiculous. Okay, that's where the real problem is. And so here's what I think is going to happen is you're getting inflation, people's incomes are going to go up, and they're going to feel like that things are even tighter, because like their medical costs are going to continue to go up. Energy costs are really starting to go up now, and I'm concerned about what energy costs could be next year. We kind of dodged the bullet this year, but that doesn't mean that we're home free next year. It's just going to get tighter. And what is it going to take for people to realize that the thing that's affecting your quality of life is that the cost of everything is getting more expensive, and not so much that you're not making enough. I am self-employed here and there. When I am, Oscar is the best option, around $375 for a single, but not many doctors take it. Now I'm on Cobra paying over $7 Dude, like a quarter of my income goes to medical expenses. I'm not even kidding. It's retarded. I remember when I first entered the labor force, before Obamacare got involved, I was paying like $100 for health insurance or something like that when it was just me. And now with when you're doing health insurance for a family, and I have this medication that's expensive. Oh my gosh. Like I'm literally talking like tens of thousands of dollars gone into this stupid medication. Man, the healthcare costs are ridiculous. And Obamacare made it so much worse too. That's the crazy thing. Is that Obamacare made it so much worse, and Republicans got really upset about it for like a few years, and now it's like everybody's forgotten about it. Just wait until something goes wrong and bang, no, I save money from the. So the thing that I have, you often don't want to talk about medications and stuff like that in public, but I think that this one is okay to talk about. Okay. So I have ulcerative colitis, which means that I get ulcers in my large colon. And it's because my immune system is overactive. Now I'm like allergic to everything, and I have an overactive immune system in general, so that might be part of it, but they don't really know what causes this, if there's like a bacteria in there they can't get rid of, or if it's an autoimmune disease, or what the deal is. Okay. And so the only solution that they really have to it is to basically give you an aspirin. But it's an aspirin that is targeted directly to the colon. And then that reduces the inflammation in the colon and you're fine. So I think that I forgot to take it on Saturday and Sunday. And so on Monday I was feeling very tired and wasn't really my best on Monday, right? And that's kind of what it does to you. And you'll start getting like your stool will kind of turn maroon because there's blood in it. And you get really tired because your immune system like really reacts strongly when it's a gut problem, right? So your quality of life when you have this it really sucks. And if you don't do anything about it, they basically it turns into they have to cut your colon out and then you have to have a colostomy bag, right? But this medication, it's just an aspirin, and it's targeted to the gut. Okay. So the way that they do that is a coating on the pill. So they have a special coating on the pill with a certain chemical that just doesn't break down until it gets into the large colon. And so the pill stays all the way through your digestive system until the large colon, and then the casing dissolves and the medication is delivered. Amazing, right? Okay, so there's two parts to this pill basically then, right? There is the medication itself, which is called mesalamine, which is like aspirin for the gut. Okay, and then there's the coating. Okay, so here's where the problem comes in for me. Okay, this medication, because it's such a revolutionary technology or whatever the deal is literally like for a month's supply it's like $1,000-$3,000. I think it's $2,000. It's a lot. It's insane. Okay, but that's okay. You have a health insurance, and the health insurance pays for the medication, right? Not right, because it depends on your insurance. So the first problem that I had to deal with was that the insurance doesn't pay for medications until you've reached your deductible. Oh, that's the most evil thing ever. But that's after Obamacare, that's what they all switched it to. When these things started coming out, they said, okay, well, we won't do medication until you've reached your deductible, right? Which is so retarded. Like the whole thing is, you think about it, like the whole point of a deductible is to be like, okay, there's, stuff doesn't happen to you every year. So there's only a certain point at which, you would need help and so forth, right? So there's a certain amount that you can absorb, and you're not going to have to absorb that very often, right? Okay, but when it turns into you are going to pay the full deductible anyways, then what is the effing point of having a deductible? Makes no sense. It's stupid. But that's what happens to me. I meet the deductible within the first 2 months, essentially. And I get the best, lowest deductible insurance that I can so that I can hit that point as quickly as possible so that they pay for the medication as quickly as possible. And then I put a ton into my health savings account so that it never has to hit into my actual income. Because if I had to pay for this, like I'll have to pay for it in, I got some in December, so it probably won't come up again until April. Okay, but if I had to pay for it in April, that would just destroy my finances, right? It's so ridiculous, right? Okay. But then here's the worst thing. This is the thing that really pisses me off, man, is there's a generic. The generic has the mesalamine, but it doesn't have the coating. So the generic literally does not work. It doesn't do anything because it doesn't get to your gut. It's useless. But because it has the same chemical in it, they consider it a generic. And then the insurance doesn't want to pay for the name brand one. So then you have to deal with all of the problems of having to get the off-brand, you know, the non-program medication. Oh my gosh. Medical expenses are a huge part. And when you consider that that's like for a 3-month supply, that's like $3,000 or something. Yeah. If I could have taken all of the money that I've had to put into this medication and I could invest it in the market, I don't think I'd be a millionaire yet, but I would be well on the way. Oh wow, are you gonna get an MRI for a bulged disc, Uzi? That sucks, man. It's odd to see volume drop after the New York Open. The first 30 minutes of the S&P 500 has been a little lackluster here, hasn't it? Are you sure that... Oh, it's not correct anymore. So that 4% right there is where we were at the first time that we hit 4%. Okay. So the relationship between price and yield does tend to drift. And so it is, especially in the future. So now it's different, but I still keep that up there just to remember that price. But it's not actually 4%. 4% is probably quite a bit lower. Back issues can really suck. This is the one where, you know, like the whole thing about like the medical industry, they're not really there to help you. They just want your money. They're there to be a patient. And so it's not really in their interest to like, quote, solve the problem. That really seems like that's the case with back problems. Like when people have scoliosis, like what freaking causes that? How is it your back can just grow that crooked? You don't know what causes that? Really? And they don't really treat it. They don't go in and say, well, here's what you might be doing that might be causing that. So what it's done to the nerves that go into the... Oh, that's So I told you guys about the bone spur thing, right? That's kind of well, that one's a little bit different. So I have like a bone spur in my elbow. And when I went to they had that look at, they said that the bone spur was underneath of the tricep. So in order for them to cut the bone spur off, they would have to like cut my tricep to get underneath of it, which would really suck because it's like a really long recovery you don't want to do. So I just got this bone and it hurts a lot. But the whole thing was that they said, oh, well, sometimes it can push on the nerve there. Well, mine is not pushing on the nerve. So I'm lucky. But if you've got something where like a disc is pushing on a nerve in your back, that is a really nasty situation. Yeah. I had a friend that was one of my ex-wife's friends, and that hung out with us every day, actually. And she had that. It was really bad. Just went away one day. Now the good news is that they have like new kinds of implants for like replacing the discs in your back. So if you have to do surgery, you might be do better, I hear. But it probably depends on lots of different things. Well, we've been waiting for about an hour, and we have gotten some downside action in the treasuries and all, but I'd say it's been awfully slow. And I don't know if I want to hold this through the PMIs. You want to go long? They do seem to be there appears to be a little bit of a liquidity hole here at on 9.5, right? Oh, hey Jonathan, how are you? Yeah. Oh, hey, they filled me. That was fast. Are they gonna like just absolutely collapse here now, and I'm gonna regret getting out? I didn't think I was gonna get filled that quickly. That getting filled that quickly kind of makes me rethink doing that. Okay, so here's the thing, Jonathan. I really think that you can do this yourself. So like, here's what you got to do, right? Is you come in here and you can say, okay, yeah, here you go. You create a stream writer. You say new stream writer file new, and it would use the name of the file. And then you can come in and you can say file.writeline. And that's it. And you don't even have to use the async one. And that's it. So all you have to be able to do is get the piece of information from the indicator that you want and then write it to a file. So they're actually really easy. So the example that I would use is if we go to my free indicator pack, I believe. Maybe it's not there. Just kidding. I don't think that you'll be able to see this. I have this export levels so you can see it, right? Using stream writer, write text, and then for each property that I have, I have like open, high, low, close. So I say, okay, the prior open, I write that value plus PO, and that's it. And I'm writing that to the file. That's so that I can like import these levels into Jigsaw, right? That's all you got to do to write to a file. That's all you got to do to write to a file. So if are you using Jigsaw's volume profile, right? Then you should be able to go in and say the level at that price, right? And if it doesn't, then find a different volume profile indicator. Yeah. Okay, so it's Let's see here. This is one of those things, like, here's the thing, here's how I should present it. The thing that you want to do, you've got to learn how to figure this out, because otherwise I would have to do all of the work for you. Like, it won't just be like getting the data out of it, right? Okay. There's somewhere there's talks about the API for it. Where is it? Setup parameters. Visual parameters. Lines parameters. Okay, but then here's the other thing, is I have a video. If you have to make your own volume profile, I have a video about data structures that basically shows you how to do that. So maybe go watch that video. I do think there is a way, though. So hold on, we are getting some stuff here. Final PMI. Okay. I think that, if we were to breach the lows in the next in the next 15 minutes and all of that, then I might be a little upset. But I don't think that I wanted to hold that through the PMIs that we're going to get, because, who knows what that's actually going to be. So I think that I did the right thing. How can I do this? I think I have my own volume profile. Yeah. So if you make up your own indicator, then the way that you do that is you have to create a dictionary that has, like, so in my case, I have a dictionary that has of a key value pair that is the price and the information about the price. In this case, if all you're going to do is volume profile, then it could just be double comma long being how much volume at that price, right? And then you just come in here and you say, okay, if they were buying, then I come in here and I add the volume into the dictionary. I say, okay, the price, like, if there's already an entry in the dictionary, then I just add to that value, and if there is not, then I create a new one. That's all there is to it. I haven't used Footprint a whole lot lately. Yeah, so watch the data structure video. It shows you enough information to make a volume profile. I don't think that I'm using volume profile as the example in there, because I don't know if NinjaTrader necessarily wants you to make your own volume profile per se. Okay, but I'm basically, when I made that video, I was basically like, here's how you make your own volume profile, without telling you explicitly that I'm teaching you how to make your own volume profile. Does that make sense? So just work on it. I'm saying you can figure it out. The programming for it is not that hard, and there's a lot of example code out there for it. And if you really want to do that kind of analysis on it, you're gonna want to know how to do that sort of stuff anyways, right? Because it's a part of it, yeah. I mean, the platform also kind of discourages you from backtesting on order flow indicators because they know that the replay can be a little unreliable for short time frames. But yeah, I have a lifetime license, but I'm not using it here because my lifetime license doesn't let me use Rhythmic. I really wish that I had gotten into NinjaTrader earlier and it had just had the full lifetime license that still allows Rhythmic, but sucks. And it sucks that that you can't even get it anymore. And like I asked them and they're like, no, we're not gonna do it. Well, screw you. I don't use the prop firms. Don't call them that, man. Okay, if they don't require you to have a 55 Series 55 license, we probably shouldn't call it a prop firm. Okay, is it 55? Yeah, equity trader qualification examination. Yeah, just call them funded trader programs. Well, it could be Series 3 too, but Series 55 is an equity trader qualification examination. So if you were going to go to, I forget the name of the prop firm that's still around here in the United States, but if you were going to go and work for them full time and you were going to do equities, you would need to get Series 55, which I understand is not that big. Yeah, SMB. Yeah. I think that the guys at SMBs have 55s. But Matt talks highly of it because he makes a lot of money from commissions from selling them. And because the only way to justify the kind of insane, degenerate kind of risk taking that he does is to do it with other people's money. No, man, that was the most shade I think I've ever thrown at him, but I think that Matt is a nice guy, and I really appreciate that he's trying to do the YouTube thing in a a ethical manner, I guess you could say. Because he's not just like outright trying to lie to people like some people do. Yeah, they're talking about Matt. Some people are just like outright trying to scam their audiences, and Matt's never been that. Matt's just, I do my trading and this is how I do my trading. And that's it. But he does advertise funded trader programs a lot. That's probably a good portion of his income. And I'm not a fan of that. Forgot to turn my little fan that cools the camera off. Like it's not like it's bad to have affiliate links. I have affiliate links and everything. It's just that I really don't think that the funded trader programs are in line with the are in line with the goals for most retail traders. I don't think that they're helpful for most retail traders, and I don't think that it's a product or service that we should be actively marketing to our followers through affiliate marketing, right? Because to me, affiliate marketing is, this is a good product, I use it, and you should get it too. Right? Like the stuff that I have, this last video that I made, kind of part of it was, look, here are the places where the retail traders have the problems, and here are the services that help you with that, right? And this is a place where you can spend a little money and it does help you, right? So those are things in there that I think every trader can benefit from, right? But I would not go in and say, you should buy Bed Bath & Beyond in my video description, right? What would that be? Because that to me would be like saying everybody should buy Bed Bath & Beyond, right? And I don't think that's the case. I don't think that's the case, that everybody should buy Bed Bath & Beyond. In fact, it's you know, the whole thing is kind of a whole sketch deal, right? But right, that would be the whole thing is that like your advice, some advice needs to be specific to the person, right? So I'm okay with making a video about funded trader programs, and I'm okay with doing a sponsored video about funded trader programs, because then I can have the opportunity to come in and say, okay, here's who this service actually makes sense for, right? So that's why I don't do affiliate links for funded trader programs. So I didn't mean that to be like I'll, you know, screw Matt sort, because he is a nice guy, but that's I think I misspoke there a little bit. Right, but that was the point that I was trying to get across. Well, yeah, so the issue with the bigger issue with Matt here, we're throwing the shade, man. The bigger issue is that he is completely dedicated to a style of trading that just doesn't work, right? His whole thing is price action mean reversion. And so you're going to find him taking on huge amounts of risk in the wrong direction. And it doesn't work. If he watched all of my videos and took everything that we say in our videos to heart and completely shifted his strategy around to trying to understand what's going on in the market, predicting the order flow, and then going along with the order flow when it's starting to confirm for you, and just completely ignored his technical analysis price action bullshit that doesn't work, okay, and he continued to take on like excessive risk the way that he does, he would probably do some amazing things. But they believe this price action shit, even though there's like nothing to back it up. Yeah, Brian Watt's, you know, I don't hear about Brian Watt too often for some reason. You want to see, here's something that I find always really interesting to look at. Because I don't really care too much about other creators. I like to ignore other creators because I don't want the way that they do things to influence the way that I do things. I want to be unique. You know what I mean? Okay, so how do I know all of these names? Well, the reason is because if I come in here to my audience, it shows me who else is watching. So Corbs actually wanted to do a video, and I told him no, because I saw some stuff on his website that I didn't like, but the audience is pretty similar. I'm surprised that people still watch Patrick Wayland. That one kind of pisses me off, to be honest with you, because he was coming in and like, oh, I'm this amazing trader, yada, yada, yada. And every day he would show you this amazing trade, right? And then eventually people started calling him out, and he had to admit that, yeah, like it's not real. The trades I'm doing are all sim trades, and what I do is I just YOLO in on everything all day until I catch something really big, and then I turn that into a video. That's what he was doing. And he made a video admitting it and everything. And then they just kept it on going like it wasn't a thing. And everybody kind of forgets, like the new people that come in, they don't realize that that's what happens. Okay? But this guy is full of shit. Okay? That's how I know about these. It would help my outreach, but I'm really cautious about who I'm going to work with, and he was doing stuff with his marketing that is sus. Let's try to call it sus. He's doing things. So here's the one that really gets you is if you're going to a website. Okay, so say I'm selling a program, right? My indicator suite or an education series, right? I think in his case, it's an education series. Okay. You're selling an education series and you have testimonials on your site. Okay. So first of all, testimonials have to be like the whole thing that they have. Like you say here, write a paragraph of what you thought about my thing. And then that's the testimonial. And I have to put that whole thing. Okay. So this is the first thing. Okay. But then the thing is if I have a testimonial and it comes in and it says, I made so much money from this course, it made me rich. It's gonna make you all rich. You can't do that. Okay, that the FTC will come after you. That's why they came after Ross from Warrior Trading. That's why he went after Ross, right? So you could come in and you could say, man, I learned so much from that and it really improved my understanding of the markets. That's okay to say. Right. But to say, I made so much money, unless that's what your average customer does, it can't be part of your marketing. And that's what I saw on his website. So I told him no. And I told him, like, here's the things that I have. If they're in violation, I wouldn't, be careful about it. I think he was kind of bummed about it, but my integrity matters a lot to me, and I can't associate with people that are using marketing that I think is against the rules. So told him no. I probably shouldn't have told you guys all that, but you brought it up, so I kind of screwed up. So now you know the full story. Ooh, I'm so glad that I did not hold that. Oh, okay, wait. Ooh, this is interesting. Boo. Come on. Give it up. Okay, so the US ISM manufacturing PMI was 47.7 versus an expected 48. My financial juice just crashed, but the prices paid was higher than expected. And that is why I think you saw this initial huge buying spike, and then they just sold it so effing hard. The micros still appear to be not completely in line here. They're getting, well, maybe things have kind of evened out, but when I took that, they were the futures were the micros were frozen or something. I don't know what's wrong with that tab, but financial juice crashed on me. Sorry, manufacturing prices paid, they were expecting 46.5 and we got 51.3. So that was a pretty big beat on the prices. That's going to be bad for yields. But we getting this movement here. It's going to be a tough one. Full margin in, no. Where I had taken the original one and it rejected my order, if that one had worked and then they were still lagging there, maybe I would have done a second one. But then I'd already be taking it off because that was just to wake the micro up, right? Pretty slippery right here. We're getting this thing where the dollar is really being dominant again. A little pushback and fight there now. Sellers take it though. Man, look at how easily it trades across that entire range. Yeah, I suppose if you really wanted to play with the contracts and you knew it was going to go short, you could have really taken advantage of that, yeah. I wouldn't call it easy. It's never easy, but good scalping, yeah. Yeah. Okay, now that we've gotten back to the lows, there's a little bit of negotiation going on here. Wow. 5 launch hit in the micros. Well, that's some volume there at 05. That continuation to the downside is impressive considering how far back the pullback was on that. They're definitely selling this though, man. Look at that. Okay. Pulling there. S&P not liking it. Wow. So they did run into a little bit of an area of liquidity, like in the 03 area, and they barreled through it. They just barreled through it. And like now that we're to 111, they're even putting like some big offers up in here too. So that's quite impressive. Big move. What the heck? Wow. Okay, so it was a move. It really was, wasn't it? Good grief. Okay. Watch, is it going to go further? I just got my fill there. I was a little nervous. I don't know. I was a little nervous about that, but then they came back down to the low so quickly. You're definitely seeing it here, though. Do you see that at 31.5? There's such a good example of like it goes back and forth in that area really quick, and like where they were really willing to push it, like you can see the market makers a little reluctant to put bids out now, right? Like when it ticks up, it's like less than 500 contracts often, and that's a lot more. And then what do you know? You get this little pullback. So I definitely, and you know, a 111 even is an area that's likely to have a lot of liquidity on it anyways. I doubt if they're going to break this easily. Yeah, well, I mean, given the whole circumstances. Okay, so let's think about this for a little bit now that we're past like the initial thing. That was I did really good there, man. Like wow. Because I got out, I was like, oh, I don't want to be in on this for the news. And then when it happened and I saw all of the buying, I'm like, oh, I'm sure glad that I didn't hold that, etc., etc. But then it came right back down, and I saw that number, manufacturing prices page 51.3 versus 46.5, and I'm like, yep, you go short. Micros aren't reacting correctly. I'm gonna market hit into it. I'm gonna wake them up, and it worked. I was you watch them. Hey, listen. Seth's the edge, man. I was the first one. You go back and look at it. Nobody else in the micros was trading. I was the first one. Proud. I'm so proud of myself right now. But and then I identified a strong pullback. Now it might go lower. It seems to me like that number is gonna really scare people on the whole like inflation thing. And by the way, we're like really, really close to 4%. So it's kind of hard for me from habit to not want to take the profits when I see that happen. We maybe could look for another entry though. Let's see here. If I got out at 988. So, we'll see if there was another 10 bucks in it or not. Let's just see. I mean, I'm up 40 on the day. That's like really good. I guess the other thing we need to look at is volume. Okay. It was about 25,000 contracts short, which is about what I would expect on this. So the question now is like, okay, that was a significant move on news, etc., etc., etc. Is that a big enough piece of news to turn this into like a trend day sort of a thing? I guess we'll see. Looks like I could have held on for a little bit more though. Yeah, they went quite quickly after that. I'm probably holding it a little too tight given that situation, but it's still okay. That, I mean, that's the way that I want to play it, generally speaking, because you never know if they could just flip back up to that 111. They're probably going to have trouble getting away from that 111, and there might even be a more significant pullback here. So it's not a complete given that was a bad exit. Okay, so here's an interesting thing to look at. Jacob saying cash at 4%. Let me show you something. They definitely seem to be pricing in something different though now this morning, aren't they? Let's see here. I want to show the last few days. Yeah. That's not what I wanted. Okay, so the last time we were at 4%, right? Look at it. Like when there was one day where we just kissed it and then retraced, but then ever after that it kept going through 4.6, 4.8. Then it came back, and then when they pushed through it this time, they really ran, and that's when we went to almost 4.5, right? So I guess what I'm saying is that like 4% looks like a good profit taking spot, but there's in this situation it may bust through it, right? They're still having some problem with this liquidity hole at 111, but it looks like the sellers are getting like really aggressive. I am seeing some of the flows flip here, like the treasury is actually starting to see some more buying, but the 5-year is like just really aggressively pushing it down, and I'm seeing the spreads flatten too. So we may see some counterflow here in the 10-year that might make things a little confusing. If I could get back in where I got out at, maybe it would be worth taking again, but like I was right that there was a liquidity hole there, but one, I was a little bit high, and two, the market orders are still coming, man. I could see the Japanese yen falling further, so I feel like that the exit is like the most difficult part of trading, really, you know? Brannigan Barrett says basic logic says be careful expecting 2-year yields to go much further in the short term as it resets 2022 yield high at 4.88. Time to be long for bounce. And now that's price action bullshit. I don't think that now is a good place to be going mean reversion. Okay, so wait. We do have some other stuff this week, don't we? Why didn't you trade with more than one contract? I probably could have done 2 contracts with that one. So I have done 2 contracts recently. But it's kind of was turned into like as soon as I start doing 2 contracts, like it gets really volatile and I make a mistake or something like that. So the reason why I say I maybe could have done 2 contracts on that one was that the micros were not paying attention. And if I had been a little bit better on that, if I had noticed that ISM manufacturing prices paid a little bit faster, you know, I might have been able to have gotten 2 good pickoffs, right? I had the initial one that I took was an easy pickoff. Like I could very clearly see that the micros were not keeping up with the full treasury. So that one was easy. I probably could have done 2 in that. But if I had done 2 in that, it was so volatile and everything, I think I probably would have taken the second one off very quickly. So I don't know if in that situation it would have helped me out so much. I do really want to size up though. I mean, we've been doing pretty good for a while, and maybe I should just put more money in the account, and then I'd feel a little bit more comfortable about sizing up. But the big thing for me is, you know, paying for the costs, and to really pay for the data costs consistently. I should really be trading 2 or 3 contracts. So we'll see. But I also really like in and out. I have to say, like, if you're just starting out, like, one of the things that I think is really common is for people to say, well, look, you take these 2 contracts and you work all of this sort of stuff out. Okay. I don't think that the people that tell you that realize 100% what they're doing. Because you are creating a left tail, right? If you take 2 contracts and then there is a move against you immediately, right? And you lose both contracts, you know, and that happens to you like 5 or 10 times in a row, that you're going to blow your account. Like that can just be brutal. And you think that doesn't happen very often, but it totally does. Like, it'll happen to everybody at least once, right? So it is creating a left tail. It's the same thing as like kind of like taking a really wide stop. It's a similar thing. It's just that you are bringing time into it. You're only taking that amount of risk for a very, very brief moment, right? And then you're using that money that you made from taking on the risk to allow something to swing, right? So there's some advantages to that, but you are taking on more risk, right? And I think that most beginners would do better to practice all in, all out. Because when you have to do all in, all out, number one, you get a much better picture of what your trading actually is, because you're not using all these tricks. You know, you're seeing how accurate you are, right? Because there's a lot of these people that their strategy is complete bullshit, but they can't see that because they're making the money from the risk taking, right? And it forces you to be accurate. So in this situation, like, look at this. I got out maybe a basis point early, but on a move that dramatic, that's a really good pick, right? That's incredibly accurate. That, I mean, I should probably brag more about that in terms of, like, you can see the things that I'm talking about, the liquidity holes, the reason that I got out, they are real things in the market that have real impacts that in certain situations you can utilize, right? It's a real thing. Because how do you get that accurate? That's just not, you can't get that accurate so often without it really, there really being something to it, right? But I don't know. I don't like to brag. Like, I don't want to be the narcissist. But that was a good one. I feel real good about that trade, man. The thing that I feel good about that one with is that as of late, I've maybe sometimes been a little bit too reluctant and decisive, but that was one where I knew what was happening and it clicked and I hit in. It was perfect. Good trade. Good trade. I think I'm a little dehydrated this morning because my lips are really chapped and my mouth feels a little dry. It's like they're coming back down to that 111 again. So it's definitely like, I'd say it's a pretty wide hole, but it definitely looks like a liquidity hole here around 111. Oh man, that's really interesting. Look at the cumulative delta on the 10-year, man. Yeah, come over to the charts and look at this bottom one. Look at that. We sold, and now they're actually almost higher in cumulative delta than they were before. But you're not seeing that in the 5-year. So it looks like some spreading action to me. I think that's some spreading. that whole thing that is a curious move. There really was the most interesting move we've had in a few weeks, hasn't it? Your daily footprint says negative 1268. Well, I mean, it's going to be different between different platforms and stuff like that, but it's weird that mine came all the way back. You know, this is something that I don't talk about very often. But I'm just realizing that maybe explaining the story behind this would maybe help people a little bit, right? So the thing is that something that happens a lot to me when I'm like working on an indicator, I have somebody testing an indicator for me, or they want me to make an indicator for them, is they get really hyper focused on the exact value that it's giving them, because they want to do some sort of quantitative strategy. And so to them, the difference between it being 450 and 500 is a significant difference to them. And like they should always match up correctly and everything, right? And so what they'll do is they'll say, okay, here's what Seth's had and here's what mine had, and the number doesn't match up exactly, right? And they are always freaking out about that, right? Well, that's because you're worried, you're turning it into technical analysis. You're trying to say that the exact number of contracts that it came through here really matters a big deal, right? It doesn't, okay? There was 20,000 contracts. That it was 20,000 contracts versus 20,100 contracts is actually not that big of a difference in the larger scheme of things, because either way, there was a huge imbalance between market buys and market sells, right? So why does this happen? Well, because your matches feed and your level 2 feeds do not 100% match up. So when I see some volume and it sells, what the program does is it says what was the best bid, best ask at that price, and then it determines whether that was a buy or a sell. So if I see it say that there was some trading at 010, I don't necessarily know if that was a buy or a sell, because it might have been the best bid and best ask might have been flickering around there a lot. And so in those situations where it flicks back and forth across one price a lot, you can't what your cumulative delta and stuff like that, it's not 100% accurate unless you have market by order data. If you have market by order data, then that gives you enough information to sort out what happened for sure, right? But everything else has a little bit of error in it. Everything else has a little bit of error in it. D is laughing because he's one of the people that has done this, but you're not the only one, D. You know what? So my mentor, you're so much like him, actually. He'd go back through and check every teeny tiny little, and any possible tiny little discrepancy, he'd be like, oh, what's about this? What about this? And I'm just kind of like, yeah, we could just come through and do the thing. It looks like it works. Huh? Well, so there was a guy named John Bottomley that when I first started trading, I worked with a lot. In fact, if you go back to some of the earliest streams on the channel, you can hear me talking to him, and he even guest hosted the stream a few times. He died about a year ago, so he's not around anymore. But kind of what happened was I came into his trading room. He had a trading room, and I wasn't willing to pay money for it. I mean, it was ridiculous amounts of money. And like, here's the thing, like, he did make money, but it was like, it was actually funny because the thing that he was doing when he really made money stopped working. Just like that's always the thing. And then he had to sort something else new out, and he found a new thing by trading the London session. But I digress. So I came into the room and he saw the technical skills that I had and everything, and so he let me stay in the room in exchange for like writing indicators and stuff for him. And then it just kind of became a thing over the years that were constantly working on things together. So I have so many indicators and strategies. A lot of that is because of John. So much of that is because of John, man. I can't tell you. It was crazy to me when he died, because there were so many people that were like, oh yeah, I was working with him. I talked to him a lot. And I don't know how much he was actually splitting his time, because for me, it was very often get on voice chat and talk to him all afternoon, sorting things out on indicators, you know, like it was a lot. So I in terms of like an individual that I have learned a lot from, I probably learned more from him than anybody else. It's kind of funny to me because the things that I learned from him that I don't think I would have figured out on my own, and I don't really see other people talking about, are things like, okay, there's the auction. We tend to move up after the auction. We tend to move up on the first day of the month. Like all of the little things about seasonality and some of these quirks about single print. Single print was in particular his thing. He taught me all of those things. So he was never really focused on the news like I am, right? Yeah. A lot of my thing is kind of like, well, he did have success in his time, but I still think that some of the things that we know now would have been more beneficial to him. You know what I mean? Yeah. His doing a single print. So a single print is like an area on a time profile or TPO where it only ever touched it once, right? So when you get a really strong move like the one that we just had, there's going to be these spots where you know, they only touched it once as they moved through it. And what you will often find is like, so we're down today. I don't think that this is going to come back, you know, but it may be a few days or a week from now, we might be retracing this. And it's really, really common for them to retrace through that profile, that if they're going to go, they're going to come back to like 09 half or wherever it was. It would actually probably be more like they would retrace all the way back to 09. You know, that would be where this single print would be. Yeah, they're like gaps, and we're not sure what causes the behavior, and we're not sure how to prove a statistical aberration or a strategy based around it that seems to do, you know, that it really has some edge to it. But what I will tell you is that if we're retracing and we get to that 09, you will see weird behavior at 09. There almost always there is like a pushback at 09. Like they'll hit into it and like there's some algorithm that does something there that like really aggressively hits back into it or something. And it happens almost every time. So there's probably more complicated than that. I'd be really careful about self-fulfilling, because especially when we're talking about something that's so technical like that, you know, if it's self-fulfilling, then people will figure it out, and then people trading on it kind of makes it like not happen, or it makes it happen too fast for you to take advantage of, and you know. So I guess what I'm trying to say is that that was the one thing on the technical analysis side that he showed me that I really am like, there's something to it, but we can't prove what it is, and I wouldn't recommend like basing your trading on it. But it was just all of those little quirks, or like the way that it plays at 16. Whenever you get ZB gets at 16, I always do weird stuff at 16, right? Those are the things that I really learned from, and those weren't the things that he focused on, but it was so funny. It's like he was good. He was good. He did really well doing like volume profile trading. Like he'd come in and he would just take in a trade at the beginning of the session and hold it all day and make like $1,000 on a contract. And he did that day in and day out forever. And it was always like, how did you hold that? How did you do that? You know? And the thing that was crazy about it, though, was that I don't think he really realized where his real edge was. I think that he knew so much about the market and the tendencies of the treasuries and all of the things about the business. Maybe not in the way that like Akshay does, but he knew a lot about the 30-year bond, let's say, right? And he was incorporating that into his trading unconsciously. And he thought that the edge was all in these other things. Always thought that was interesting. No, so like that was the whole thing, Jonathan, was that we would work together to backtest his ideas, and it was always that when you started applying the amount of rigor that I always wanted to do on a backtest, it didn't work. So he had kind of come to the point of, well, backtesting isn't actually effective because the backtest says that it's a crapshoot, but I still think it works and I use it and I'll make money, sort of a thing, right? But that was kind of a big part of how I got to where I was or where I am, because we backtested so much stuff. And it was always kind of like, every once in a while you find something that kind of worked okay, but it was still like, meh. And then if I looked at it in 10 years, it wasn't good, right? And then during COVID, I went through a period where I did really, really well. And then I went through a period where I did really, really badly. And that was the point at which I said, you know what? Like the thing that seems to be working for me isn't. So I'm just going to focus on that, right? And then I started to read all of the stuff about the stylized behavior of markets and order flow and everything, and was able to actually come to a point to be able to separate like what was actually working and what wasn't working and why does it behave that way and everything, to the point where I'm able to give you this information that I really, really strongly believe gives you a better chance, right? You're saving yourself so much time by learning that order flow stuff, the things that I put in my videos, right? So really what you're getting is like, because John taught me a lot of stuff. So I really feel like in some of those videos, you're getting like decades worth of experience that you're just like, jumping to the front of the line sort of a thing. Well, so I have a video series about order flow. We're going to like the stylized behavior of markets and so forth. So that's the most informational stuff that I have on the channel, right? And most of my other videos kind of hit on this point over and over again and reference back to that, okay? I want to do back testing, but I don't know how to account for changing. Well, it's hard. One of the things is that a lot of people will say, yeah, technical analysis works, but you have to consider the current market conditions and adjust which strategy you're using based on those conditions. That's true, but I will go and do that, and I'll get strategies that it gets better. I can even get them profitable, but like to get to levels where like you would start a hedge fund with it, no. You know what I mean? Okay, so one thing that you can do to identify regime shifts that really, really helps is to look at volatility. Volatility is the biggest one. You're looking at whether we're increasing or decreasing in volatility, and there's a couple of different ways that you can do it. But one filter that I've found really, really useful is just daily average true range. Because, I think the one that I would really like to do is like use the VIX and maybe even use the VIX with the moving average to see what the trend in the VIX is at that time and adjust your strategies based on whether volatility appears to be increasing or decreasing. But a lot of you guys here in the futures backtesting on NinjaTrader, you're not going to have access to that data, right? So the next best thing is ATR on a daily basis, right? And you can use the ATR on a daily basis to say like the first thing is, so the one that I've found that I've always thought was really interesting is like if you have a technical strategy and it seems like, oh man, when that volatility gets high, the strategy doesn't work anymore. So what do I do? Do I like start reversing my trades or what? And you'll find that if you just start reversing your trades, that you still do awful. And so in those situations, it tends to be that when you get into the regime that's unfavorable to the strategy, the best thing to do is to just not trade it. So if you go in and you say, if the daily ATR is over a certain amount, don't trade, that tends to really improve your stats a lot. Okay. The other thing that I've found that tends to really improve your strats a lot is autocorrelation. So we can look at trend, and you can even look at how strong the trend is. So like CCI is a really good metric to show you how strong is the trend relative to each other. Like how strong is this trend relative to the last trend? That's kind of what CCI does, right? But if you come in and you do a filter based on CCI, where I only trade it when the CCI is within these certain parameters and stuff, that usually helps it, but it also filters out enough trades that it's kind of a questionable trade-off, right? But if you use R squared, and R squared is just saying how autocorrelated is this series. If it's going straight and up and to the right, then it's very highly autocorrelated, right? So if you base your trades based off of what R squared is at that moment, that really strongly improves your hit rate. And you can even actually trade I made a video about this. I put a video about this, right? That a moving average combined with R squared was incredibly effective in the immediate aftermath of COVID. So like 2020, 2021, that worked so well. So those are some kind of technical things that that help you, that I would say, okay, can you give a quick rundown on what R squared is? So R squared is basically saying how well does this current bar correlate to the next bar, right? So if all of the bars are slowly, a little bit up, and it's just all blues all the way up, then you're going to have a high degree of autocorrelation, right? So like I said, like a perfectly autocorrelated move is one that's just a diagonal line, right? Whereas if you're chopping around in a range, really tight range, there's like absolutely no autocorrelation, right? And then it's going to be zero. Could be a break of the, yeah, they're kind of pushing on it. I don't know if it's been long enough or not. I mean, it's been 30 minutes, so they might be able to, but I'm going to bet that if somebody is really going to come in and like sell some more, that they might wait. Anyways, so here again, the stats on it aren't that great. When you really like the Sharpe ratio and everything else about these things, I wouldn't start a hedge fund with it. Okay, but if you've got a strategy that's incorporating other things that we know do work, like order flow aberrations, correlations, fundamental information, models of CTA and options positionings and so forth, right? And then you add those things on top of it, it does really seem to help, especially in the S&P 500. So some things I can share with you on that. But like I said, like the whole thing is that I spent so much time back testing things with John, and I said, I do way better when I hear something over the news squawk and it's good. And I know that they're going to buy it or sell it, right? And then I read the trades, quotes, and prices markets under the microscope and really learned the research behind it all. And that was what was able to get me to the point where I was able to create a conceptual framework that was in line with the research and really explained what I had been seeing. so that I could really confidently make decisions, you know. And that was a big turnaround for me. So I'm not going to say that I'm like making tons of money from it and everything, but and there was a transition period. But once I got through that transition period and kind of got my experience up to where I was like getting really good at it, like you can just like straight up see. So if you look at the most recent video that I put up, this was the key components of a day trading strategy, why you suck at day trading. And I go through things that like retail traders are missing or ignoring that you really should be incorporating into your strategy. And one of the things was looking at your stats, and I show you the stats, and you can very clearly see that point when I made that shift in those stats, that it was like, I was not doing too well. And then ever since then, it's just kind of been gently up. So are you a scalper? So here's the thing. Scalper can mean a lot of different things to a lot of different people, right? So I don't find the term scalper too informative of what somebody is doing anymore, right? What I would say is that I am trying to predict order flows, and when I see an order flow, confirmation that that order flow is there, I try and ride that order flow as long as I can. So oftentimes that does mean that I'm in only for a short period of time. Like a 30-minute trade is usually pretty long for me. I want to hold them as long as possible, but I usually don't swing them. So some people might call that scalping, but some people might not. I've seen a lot of 10-minute scalpers. Crazy. That's clearly a position. Yeah. But that's where I'm saying, like, that distinction. So here's the thing, is that there was a time when that distinction mattered, right? Because there was market makers, and then there was like the big institutions trading against those market makers. And so scalping was a thing, right? It's just that like what was really called scalping has been taken over by the robots. It really is. It's super hard. It's in most of these markets, humans are just not competitive on the quote unquote scalping. So what happened was retail traders started calling other things scalping. It was like, well, I'm only in the trade for like 5 minutes, so that's scalping, right? It's not what the robots are doing anymore. It's not. It's just not pure market making strategies. You can do it, but you need like a really inefficient market, and there's anyways, as a whole thing. So that's why I say, like, I just don't find the term really useful anymore. Your theory is good and all, but when all is said and done, the reality is you can't teach trading to anyone. No one really can. It's not something that can be taught. Yeah. So, well, here's the thing that I learned on that is that your brain is a neural network. You think of it just like the way that we do machine learning. Is they set up this neural network, and a neural network is a series of gates that basically do these computations and then pass them on to the next series. That's what your brain does. Your brain works in a similar manner, let's say, but it's much more advanced. Okay. And so when you are setting up a neural network to do something like make pictures for you, or you know, the way that OpenAI works, right? They have to train the network, right? So what has to happen is I can come in and I can give you the information, right? These are the things that we know about the markets, that we know that are proven about the market, right? And we can even give you some general tips about how those particular properties of the markets may matter in certain situations, which is what I do in my strategy PDF. If you haven't checked that out, you can go to speculatorseth.com/strategy.html. It will email you a free copy of the strategy PDF. It's a work in progress, so if you have suggestions, I'd love to hear them. And that's the best place where I've talked about, like, what are the consequences of that, right? How do you kind of try and use that to your advantage, right? So once you know all of that stuff, then you have to train the neural network. You You have to use that information to train your brain to be able to see it. Till you can get to the point where, like I was today, I hear the number, I know that they're going to sell. And I know that the amount that's going to sell is going to be way faster than what the market can keep up with. And I can see that the because of the lack of liquidity, that the treasury and the micros are way off center, so I can market order into it. And I can, because the neural network is trained, I make all of that decision in a fraction of a second, right? So you're right, Lucas. You can there's only so much that you can teach, and then it really is something, it is a skill that you can only get good at by actively doing, right? But that's where I think that this information becomes so invaluable, because if you're doing all of this, spending all of this time training your neural network based on information that's false, like they do with price action, right? So now you have a neural network that's completely optimized towards seeing these changes in price and comparing it to past changes in price, right? You're looking at a completely different set of things that doesn't do any good for you. And so now when you come in and you learn the truth and you realize that price action does not really have anything behind it, and here is the information that we've proven empirically that, you know, are actually a thing in the market, right? You have to retrain your neural network, and that's hard, right? Because you're behind, you've lost all of that time, and you have to like retrain it, and your brain's gonna want to go back to sticking to that thing. Like I still do it. The technical, like I point out technicals all the time, don't I? Even though I know that like it's not going to be really indicative of where it's going, and I just kind of point it out because it's like I know that people are going to be paying attention to it. But it doesn't really help you decide which way it's going to go, right? Scalping needs working the bid-ask spread. I think let's make the decision here between us, okay, that on our stream, scalping means market making. Yeah, I think so. I think that's what it should be. And my position is that humans are not very competitive in scalping anymore. That doesn't mean that it's not possible to scalp, but it's very difficult, and you might need the right kind of like market and situation to do it. Okay. What is price action? So we have a video about why price action sucks. So I would ask you to go and watch that video. But the general idea behind price action is the idea that how the market moves matters. So price action kind of price action comes down to is its technical analysis, where they did not like the kind of technical analysis where you're using a moving average or like a delayed kind of smoothing signal to make your decisions. And so they're more concerned about price hitting a certain spot or whatever it is, but they're still utilizing patterns that take place in the past. It's just that those patterns tend to be based more on like doji patterns and stuff like that. And their idea is that the market is for the most part random, but that there are certain situations that can arise where there's an imbalance and you can predict it and trade it, right? And so that's what price action is. But the reality is that price action became a marketing buzzword because people weren't responding to technical analysis anymore. Technical analysis has a damaged brand, right? And so what they were basically doing is they were taking technical analysis strategies and rebranding them as price action. So that's really what price action is. And more widely, I would refer to price action as like max price action trading system. That's the most popular system you can go out and buy. And I'm just telling you, like, to his system, it's nonsense. That book is just a collection of heuristics that you've probably heard before. It's not worth it. And then there's Al Brooks, which is a lot more dense material, but is actually just a bunch of esoteric stuff to make you feel like you don't know what's going on so that you don't realize that it doesn't work. So tradingschools.com did a review of his trading room, and I think they hit it like right on the nose. He has like a bunch of ideas about how it comes, how it works, but there's nothing backing any of this. There's no like real research backing any of this. Does he have a new one coming out? Yeah, he does have a lot of books. I really hate price action trading. Because it is among retail traders the most popular way of trading, and it's complete nonsense. I've never seen a single shred of empirical evidence coming from those guys. Never. It's always just, well, I'm making money from it, and it's like, well, yeah, because you're taking on excessive risk and you haven't blown out yet, but just give it a year. I promise it'll happen. And then they always come back. I can't tell you how many times I've had. Well, it's not so many times. I can think of about 8 or 9 times where I had a beef with somebody on Reddit, and we had that argument, and then like a year later they came back and they were like, you were right, Seth. It's serious. It happens a lot. Because Max system in particular takes excessive risk. It tells you to have a wide stop compared to your target. And so it seems like you're winning most of the time, and most people can't differentiate. Right? Most people, they just see, oh, I'm making money right now. And then the one day when they come in and they blow it all, because that's what the strategy is prone to, they think that it was them. They don't make the connection that their strategy was actually putting you in a position where it was inevitable that was going to happen. Okay, so the CMT textbooks have a lot of empirical evidence. I'd have to verify that. Because I've heard a lot about the CMT too on that it's like, it's kind of useless. Like here's the thing is I haven't taken their courses or anything, but it sounded to me like it was kind of like, okay, when you have a head and shoulders pattern, here are the actual outlays on the head and shoulder pattern. There are places out there where you can kind of get those stats, right? But again, like the thing is when you turn it into an actual strategy and you look at how it performs, it's not very good. If not, you're outright losing money. It's like within the margin of error. Like that's the whole thing. So I was getting back into like, okay, a liquidity hole. There's going to be a lot of liquidity at 111. I could see it happening. I could see the limit orders kind of being strained there and not wanting to put a lot of bids when it and starting to see price action like where it was rolling back on itself. I'm able to identify the liquidity hole and get within a basis point of a good exit, right? How do you do that day in and day out? It's not just like some 55% thing. It's a market behavior that always matters, right? Very different thing. Now, unfortunately, that one little thing doesn't necessarily tell you, you should go long here now and it will go for X amount, like what technical analysis setups they want it to be. But what you can do is you can say, oh yeah, well, we're going to probably start rotating around this price, so it's probably a good idea for me to exit, right? Yes and no. So the thing with price action is that it is hard to code. It is and it isn't. So once you get the kind of tool that allows you to quantify the things that they're typically looking at, the setups are incredibly simple, right? But the issue is that you need like a zigzag. That's the thing, is that a lot of it is a zigzag, right? A lot of it is based on you making a new high or a new low. And is this a higher high or a higher low, or is it an even with it or whatever? So once you have, which I do, once you have a zigzag that can quantify those things and can give you an exact point at where it says that like the signal is happening, then you can backtest them, and they're simple. And I will say there are some weird things in the stats of them that don't line up with the stats that I would typically see in a thing, but it's not profitable. And the thing that is funny about them is that it's like basically set up to be like, you do make money from it if you hold like a ton of risk. But like, so what that suggests to me is that the things that the price action traders are looking for as their signals, there's enough of them trading it now that it just turns into a jumbled mess in there, where you really have no, you think that a price level matters and then it just chops around that price level is what I found when I backtested it. Belt patterns are often more, that's true too. Yeah, fat-tailed nature of the distribution. Yeah, they think it's due to psychology, so they buy a bunch of psychology books to, Can the DOM give edge over? Yeah, 100%. Like I said, the things that you're seeing in the DOM might not necessarily be telling you go long here, etc., etc., etc. But like here's the thing, is people will say, yeah, technical analysis, it works when you combine it with other things or when you do it with this. But why? Why is that, right? If you really go and like read my strategy PDF, right? And you look at all of the different components that I'm talking about in there, there is a logical explanation for how those things complement each other, right? Like the whole thing that I'm doing here is I'm saying based on what that economic number is, what are the flows going to be and how much are the flows going to be, right? Okay, so then why do I look at the DOM? Because that allows me to confirm that the flows are actually proceeding in the way that my model predicts, that my model about the fundamentals in that news or whatever predicts. And all I need to see is a little bit of confirmation to know to get into a trade. And I came in from the very beginning today saying, well, there's a PMI, market's probably going to be front running that news to the downside a little bit. And then if that news is bad, then it will probably go for a while. And so I was able to make a trade, right? How does the DOM help you in there? Because you can see the confirmation, and it helps you execute better too. I mean, that's the other side of it, but you see what I mean? Like they directly complement each other, as opposed to this like, well, if you use this and you use this and a little bit of magic and somehow it just works out. Well, okay, but why? You don't actually know. And I don't think that a lot of these traders that are sharing this stuff really do know. I don't think that they have the skills to quantitatively prove their strategies. And I think that their strategies involve taking on so much risk, and that so much of their performance is based more on the risk that they're taking on than the actual signals. So they don't actually know. They can't see it. Okay, I gotta get going, guys. It is time. Would love to talk about it more, but don't worry, we're gonna make a video about volume profile. We're going to do the same thing with volume profile. So, but if you're interested in price act, go and watch my video about the problem, why price action trading sucks. Okay. Stay